Hey everyone, welcome back to the channel where we break down stocks with real data and straight talk. Today we're diving deep into Huntington Bank shares, ticker HBAN, a regional bank that's been quietly building momentum in the Midwest and beyond. Let's kick things off with a quick snapshot of where the company stands right now. Shares are trading around $18 with a market cap just north of $35 billion. The stock has delivered solid long-term returns, up about 25% over 5 years, though the last month has been a bit choppy with a small pullback. Huntington traces its roots all the way back to 1866 in Columbus, Ohio. Today it operates as a full-service bank holding company with roughly 20,000 employees and a network of about 1,000 branches across 11 states. CEO Stephen Steinour has steered the ship toward a mix of traditional banking, trust and investment management, insurance, and card and payment services. The business model centers on gathering deposits and making loans, while layering on fee-based revenue from wealth management and payments. Breaking down the top line, Huntington pulled in about $12.5 billion in revenue last year. The biggest contributors include cards and payment processing at $613 million, trust and investment management services at $408 million, service charges at $250 million, plus smaller but growing pieces from insurance and leasing. Net interest income has been rising year over year thanks to loan and deposit growth, while fee income is also helping diversify the revenue mix. On the earnings front, adjusted EPS came in at 39 cents in the most recent quarter, up 2 cents from the prior period. Full year 2025 EPS landed at 1.41, and the company is guiding for meaningful expansion ahead, targeting 1.90 to 1.93 by 2027. That's more than 30% cumulative growth over 2 years, driven by higher net interest income, fee revenue, and continued loan and deposit expansion. Management highlighted successful system conversions and steady growth in strategic fee areas during the latest earnings discussion. They noted cautious optimism around credit performance, particularly in commercial real estate, while emphasizing disciplined expense management and a focus on customer acquisition through improved payment infrastructure. Looking at the balance sheet, total assets reached $225 billion, supported by $24.3 billion in stockholders' equity. Return on equity sits near 8.8%, and the dividend yield is currently about 3.4%. Cash flow from operations remains healthy, generating over $2.5 billion last year, which helps fund both dividends and share repurchases. For valuation, we turn to a price-to-book approach, which fits regional banks better than a pure discounted cash flow model because banks generate value through deposits and loans rather than traditional free cash flows. The model blends a primary PB multiple with forward PE support and puts fair value somewhere around $20. At the current price near $18, that suggests the stock is trading a bit below our rough fair value zone. Key drivers include an adjusted PB multiple of 1.56, reflecting the bank's ROE profile, and a forward PE of 17.5 that accounts for decelerating but still positive growth. Remember, these are model estimates that can shift noticeably if you change growth rates or multiples, so feel free to plug in your own assumptions on our intrinsic value calculator at MarketSnap.com. Strengths include consistent loan and deposit growth, plus rising fee income that diversifies earnings. Weaknesses center on elevated provisions and operating expenses that are pressuring margins. Opportunities lie in further payment modernization and regional expansion, while threats include potential credit deterioration in commercial real estate and broader economic slowdowns that could hit regional banks hardest. Over the past year, the stock is up roughly 4%, with stronger momentum in the 3-month window at about 6%. It's been relatively stable compared to the broader financial sector, though weekly moves can be sensitive to interest rate headlines. My take is that Huntington looks reasonably attractive here. The valuation gap to our model estimate offers a modest cushion, and the earnings growth trajectory through 2027 is compelling if management hits its targets. That said, regional banks still face real headwinds from credit costs and rate uncertainty, so I'd size any position accordingly and keep an eye on quarterly provision trends. All in all, HBAN offers a classic regional banking story with improving fundamentals and a valuation that still leaves a little room to run. If you're building a financial sleeve, this one is worth watching closely. Thanks for tuning in. Hit that like button, subscribe for more deep dives, and I'll see you in the next one. MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.